Just a couple of questions directed for you, Peter. Peter being the CEO of Christian Super. One of the ones that regularly comes through, and Rachel has asked it this time round, was, does ethical investments mean you are sacrificing potential unethical gains? And I guess you could talk that through in what the process is in terms of ethical investing and the way that Christian Super invests.
Sure. Look, in terms of ethical investing and how Christian Super does it, we really have four main components of that. Our first thing is that we try to get rid of the stocks that we would call sin stocks, but stocks that we've identified where companies do things that don't stay in line with biblical values. And in terms of trying to identify those stocks, there are some that have absolute exclusions. For example, if you anything associated with stem cell research, the fund excludes. Now, some of our members will be surprised to know that GE, in terms of GE Credit, has a subsidiary that's involved in stem cell research that destroys human embryos. Well, one of those issues is clearly against what we think is right, and that's an absolute exclusion. So anything that we identify that has those absolute exclusions, we take out of the portfolio. Those items can be in a whole range of things. Mainly stem cell research is probably the one that has absolute exclusions, and you could hear me talking about looking through. I'd encourage you guys, one thing that we're hoping is to get out our annual report in the next week or so, and if you look at page 5 of our annual report, you'll see the companies that we're invested in and the industries that we like, and the companies that we don't invest in, and the broad categories of that. So the first step is that we try to exclude what we call the sin stocks. There's absolute exclusions, and there's also areas that we have limited exclusions on, or tolerance ranges. The one that I use is that within the Christian community, that there is a divergent view on a range of things. For example, even in my own household, there's divergent views on alcohol. My wife comes from a long line of teetotalers, and I come from a long line of publicans. So within the Christian kingdom, there is divergent views on certain issues, and alcohol is one of those. So there are a few areas that we have tolerance ranges on, and that if a organisation produces its revenue more than, say, 5%, or in some areas 10% of their revenue, we'll then exclude them from our portfolio. For example, Woolworths has a large ownership in gambling. Woolworths owns about 270 odd hotels, and as a result, their revenue from poker machine income is quite significant. So on that basis, we exclude some stocks on a tolerance range basis. So that's us removing the sin stocks.
And often called a negative screen, so you're screening, I guess, on the negative side of things, the sin stocks.
That's exactly right. It's a negative screen, so we try to get out of the portfolio things that have those negative biases. There are actually some stocks and some companies that are quite good. So we actually weight a whole range of, especially Australian equities, and companies that are environmentally responsible, socially beneficial, good governance, ethical. We'll weight them positively. We'll actually invest a little bit more in those companies as a result of our weighting process, and identify certain companies that we think do well. So we negatively screen, we positively weight, and then the third area is that we try to engage with companies to change certain behaviours. In 2009, and this is called corporate engagement, in 2009 we identified that Wesfarmers, through one of their subsidiaries, was importing phosphorus rock from Western Sahara. Western Sahara is a disputed territory, and there were human rights violations. So rather than just excluding Wesfarmers, we sat down and we talked to them. they heard what we had to say, and then they embarked on a 3-year program where they spent, it was budgeted to be $5 million, but it actually came in under budget, where they changed some of their refining practices so they didn't have to rely on importing phosphorus rock from Western Sahara. I was over there earlier this year, and Wesfarmers have said to me, because of the changes that they made to their refining processes, that they have no plans to import that rock from Western Sahara. So what we were trying to do is sit down and engage with them, express some concerns with them. Now, Wesfarmers didn't necessarily change because of our moral argument. We pointed out an issue to them, and they came to the conclusion that from a financial return basis, that it was actually good for them to look at this particular area that we were talking to them about, and they came up with a creative answer that it was actually helpful for their overall business. So we also do corporate engagement. Then the final thing is, in the Christian community, quite often we're known for what we don't do rather than what we do. So what Christian Super has been doing over the past few years is we've been trying to put in some positive investment assets in industries like microfinance, renewable energy, sustainable agriculture, clean technology, community infrastructure. And what we've been trying to do in that space is to invest in assets that do good. One of the ones in terms of the microfinance is actually investing in organisations that then subsequently give small loans in the developing world. When we first looked at it, we were really thrilled about it, because what we actually found in these sorts of areas is that they are generally, certainly in their startup time, is that they're actually not in line with the financial markets, that they actually try to produce a return that isn't directed by the financial markets, which we find is really, really helpful in giving us returns for our members.
Great. That's been
Now, Gavin, does that answer the question?
It answers the question about what the ethical screening process is, both positive, negative, and engagement. Just the one other question to, I guess, round that off is about unethical gains, and by making these ethical stances, do we then sacrifice some potential unethical gains that we could outperform the market potentially?
Well, this is a whole area where there's been a significant amount of research done in over a number of years, and Mercer's have actually produced a few surveys and studies on this, and their studies is actually commentaries around the vast range of academic research in this area. And the really interesting thing is that there are a couple of studies that would suggest that financial gains might be affected, there are a number of studies that, and far more studies that reflect that financial gains are not affected at all by it, and some even suggest that there is that there is positive returns as a result of investing ethically. So the broad picture is that the academic research is very, very mixed in this space, and the lion's share of academic research says that it neither positively impacts nor negatively impacts performance. So from a Christian Super point of view, what we want to see is that we're investing for members' future retirement streams. We need to do that. We're very focused on doing that, but we also want to invest ethically.
Yeah, great. And that I would just also agree with. That's the research that I'm seeing coming through as well, that the ethical screen, investing ethical, doesn't actually mean that you forego return as well.